like we mentioned before going into break, that we do have the management of PDS Limited joining in with us. We do have Sanjay Jain, the Group CEO of the company. Now, the company has reported their numbers. Overall, when you look at it, we are seeing a rise in terms of the revenues of the company. What's the outlook for the company going forward? That's all what we're going to talk about. Thank you so much, Mr. Jain, for joining in with us this afternoon on ET Now. It's a pleasure having you on the show. And, when I'm looking at your numbers, what is it that, overall for FY24, significant growth that especially is coming in quarter four when you're comparing sequentially? One, what is it that you are seeing in terms of the demand trends? What is the outlook that one could expect? And overall, the growth that one should expect? Do we expect to reach those high single-digit levels by FY25 now?
Hi, good afternoon. The last year has been actually a very tough year for the retail sector in general and for apparel in specific. The first 2 quarters were really tough, but then one has witnessed recovery in the subsequent 2 quarters. And also PDS has been carefully taking strategic initiatives of new offerings. As a result, in quarter 3, we arrested the sales decline. We were flat, but I'm very happy that in quarter 4, we bounced back and had almost a 25% growth in revenue in quarter 4 over quarter 3. And also in the same time, our profit multiplied by 160% in terms of quarter 4 over quarter 3. But going forward, we do have a healthy order book in hand, which is, as I talk right now, it is almost 30% up as compared to last year. So therefore, we believe in terms of outlook, the worst is behind. The order book is looking strong. The new offerings of sourcing as a service, the new offering of complete sourcing solution and brand management are all firing in terms of order book addition. And we believe that companies should be, recording, while we have mentioned in our investor deck about 10%, but we believe the order book in hand should enable us, get into mid-teens for the entire year in terms of revenue growth.
So you've guided very conservatively for a 10% growth, but you're likely to do at least mid-teen. That's the commentary coming in. Last year was also marked by a lot of new partnerships and a lot of new brands being added, whether it was Ted Baker or with the likes of Walmart, JCPenney, etc. What kind of scale-up do you expect from those in the coming year, and any other partnership which is impending, a big one at that?
I think last year was also our year of investments. On one hand, while I mentioned it was a tough year, but tough year always unfolds into opportunities. So we kind of dedicated a lot of resources towards North American market. And now we have Target as a customer who has onboarded us. We are very strategically engaged with Walmart as a customer. Kohl's and Hanes relationships are beautifully shaping. So I believe we have now a strategy which can unfold into business from US alone. It was about $160 million US dollar last year. And in about 2 to 3 years, it can scale up to about $1 billion. And the teams are in place, the customers have onboarded, and we from time to time keep closing strategic discussion with customers, and we are very, very close to signing up another deal. Strategically, wherein PDS has been chosen by a very well-established e-commerce company in US to be a strategic supplier to them. So very bullish on the US market.
Okay, so that's a view coming in as far as some of these partnerships are concerned, but it's always been a low margin business, right, Sanjay? And given the fact that you've been talking about investments, where do you see the margins headed? Do you expect them to inch at least 5% and above in FY25?
I think our margins are always to be seen in light of the kind of well-diversified, good customer base we have. So it's relatively a safe revenue. The predictability is good. And also ours is an asset-light balance sheet. We tend to always have average 30% ROC. In fact, it is 40% from well-established businesses. So these are two important factors to be considered. In terms of trajectory, we believe the initiatives underway in about 2 to 3 years from now, we should be scaling up to 5% PAT to sales ratio. So that roadmap is, kind of there that we will gradually get there in about 3 years from now.
Mr. Jain, what's the deal with Myntra? How will the $150 million deal with Myntra impact your revenue? How do you see that turning out? And what are your expectations from the US market in terms of a contribution to your overall sales going forward?
So I think this Myntra transaction somewhere is a testimony to the fact that to any retailer now, PDS has a global sourcing footprint wherein they can, cater to their requirement sourcing from various geographies. So therefore, Myntra, when they're doing very well, and as they are looking beyond India as well in terms of sourcing requirements, then PDS has got a well-established network of factories in Bangladesh, merchandisers and quality control professionals. So as a result, to answer your question, this transaction is in terms of fulfilling Myntra's requirement as far as they are trying to do small incremental sourcing from Bangladesh. That is one. And I think while India is, as a retail market, the fastest growing market in the world, the manufacturing in India is also growing up. But Indian retailers, I believe, would have a global sourcing plan from nearby geographies. And PDS is well positioned to cater to this requirement. And Myntra deal is just a first step. We anticipate more such transactions going forward. In terms of US, the second question that you asked, as I mentioned in response to a previous question, we have a plan which could potentially unfold into about $1 billion, so about 8 to 9,000 crore revenue from US in about 3 years is what we are gearing up to. So if PDS is planning to kind of double up in about 2 to 3 years from now, then at least about 30-40% of that should come in from US markets.
So much, Sanjay, for making time and speaking with us. So that's the verdict coming in on how the growth trajectory is likely to be for PDS. But